Okay, good morning, everyone. Thanks for joining us. I just have a couple of quick items and I'll turn things over to Pete and Tibby. So welcome to our webinar today. My name is Shannon Schaff. I'm the executive director and I'm fairly new. I just started in November. So in case you're used to seeing Mark, that's why you see a new face. The first thing I want to make sure to do is to thank our annual sponsors. You'll see them here on this slide. These sponsors really help us bring a multitude of programming to the members. So we're very grateful for them. And today's webinar is going to be brought to you by Key Investment Partners, Pete and Tibby, and I'll let them do a little introduction of themselves. I did want to note that you can put your questions in the chat, and Tibby will talk a little bit more about how they will handle questions as the webinar keeps going. So thank you for being with us today, Pete and Tibby, and I'll hand things over to you.
Awesome. Thanks so much. I'm going to go ahead and share my screen here. Thumbs up if you can see it. Everybody good? Awesome. Thanks so much. So welcome everybody to the webinar today. We're excited to be here. This is, I think, our probably 63rd CFA presentation. Most of these events that we've done have actually been in person, but we got pretty used to doing these webinars as well. During the pandemic, it's always been a lot of fun coming and talking to different CFA chapters. I think probably one of the most fun parts of this for us is actually having interaction between us and the rest of the society. So to the extent, like Megan mentioned, please go ahead and raise your hand, ask questions, feel free to put them in the chat. We will try our best to answer those questions throughout the presentation so that they're relevant. Nonetheless, we'll have some time at the end also for Q&A. But without further ado, I will introduce myself. I'll let Pete introduce himself, the organization. And today's webinar is going to be focused around the U.S. cannabis industry. We'll talk about, what the current state of the cannabis market is, not only from a regulatory perspective, but also from a commercialization perspective, how rules and regulations vary state by state, our views of either near-term or longer-term reform in the space, what we think is the lowest hanging fruit, kind of where valuations sit today, what the capital markets look like today in the industry. We'll dive into how we approach the asset class and how, kind of what pitfalls to avoid investing in cannabis. And we'll, kind of tie that into, what our investment strategy is as well. But to kick it off, Key was founded by myself, Pete, and Jordan, who you can see on the presentation here. Three of us come from, traditional institutional backgrounds. Jordan was with GE Capital, working at Antares before finding his way to the Swiss private equity firm Partners Group. For those of you who are not familiar, Partners Group is a large Swiss private equity firm, global presence, about 140 billion under management. The three of us met while working at PG. Prior to PG, I was with Goldman in New York, working on the buy side in GSAM on a team called Fundamental Equity, doing bottom-up stock picking, building out GSAM's mutual funds, mostly focused on US core equities. I had a little stint in emerging markets, which I think translated quite well actually into the cannabis industry as well, but nonetheless, call it circa 2015 or so, Partners Group, just given how much capital they were deploying into US assets, decided to open up a new headquarters, and they landed on Denver, Colorado, and that's kind of what brought the three of us together. Before I kind of get into the history of Key and why we decided to tackle the cannabis space, I'll let Pete introduce himself here too.
Yeah, thanks, Tibby. Hey, everybody. Great to be here today with you. It's a pleasure, as always. Just to touch on my own background a little bit, I started my career in Chicago with Equity Residential, focusing on multifamily acquisitions of real estate on primarily the West Coast at the time. moved over to Partners Group in late 2015 to focus on a variety of different things, really any types of commercial real estate investing under the sun, development, acquisitions, roll-ups, you name it, all over the U.S. We did a lot of stuff in Texas and also in the West Coast and in Colorado while I was there. Anyways, as to be said, Tibby, Jordan, and myself all met one another, got to be friends back in 2015. Colorado was absolutely booming, and it was an exciting time in the cannabis industry, just watching it develop. Long story short, after just gaining a ton of conviction in the industry and the inevitable federal legalization down the road, we launched Key back in 2018 to focus exclusively on investing in the cannabis space and primarily in the private markets within cannabis. So with that, I'll flip it back over to Tibby, and he'll touch on the market, and we'll go from there.
Great, thanks, Pete. And yeah, just to kind of give a little bit more history, you know, it's funny, when we started Key, I always like to share this. I think one of the first things my mom said to me was like, "Oh my God, what am I going to tell my friends? You work in the cannabis industry, you're leaving traditional private equity, you've had such a great career." And, you know, the truth is the opportunity was just so big, and there was just nobody else really chasing it at the time, that we saw a huge greenfield play there. So like Pete said, call it end of 2018, the Farm Bill had passed, which legalized hemp across the nation. I think a lot of folks saw that as an eventual precursor to the eventual legalization of marijuana across the board federally. And if you recall, you know, in early 2019, after that happened, hemp really kind of took the United States by storm. You started to see like CBD popping up everywhere and all sorts of form factors, et cetera. And there was just a ton of investor interest, appetite, demand for these types of investments. And so we, given our proximity in Colorado, admittedly, I don't think had ever even considered cannabis as an investable asset class. But we started to see kind of the writing on the wall as well. Started bringing deals to our investment committee at Partners Group. Very quickly learned that akin to most other hedge funds, VCs, private equity firms, we were simply boxed out from investing in the asset class. And that for us was really kind of the light bulb moment. You know, on one side of the equation, we saw a lot of investor interest, appetite, demand. And on the other side, an extremely constrained capital markets, given that they were virtually non-existent. So we set out there to form, you know, one of the first real institutional asset managers in the space in order to give investors a place to get, you know, diversified exposure to the asset class, also with folks who have been there, done that, and with a boots on the ground approach, given, again, our proximity in Colorado. So fast forward to today, just to kind of give you the full background on who's presenting to you today. We've raised and deployed our first fund. We've put just a little bit under 50 million to work so far in the space. We've invested across 16 different companies so far. Very selective. I think we've probably screened close to about 2,000 deals now to find this 16, and it's important that resonates with you, because there are a lot of opportunities out there, but you need to be very diligent about what you're investing in, who you're investing behind, et cetera. And we'll get more into that later in the presentation. So that's kind of where we've been, where we are, where we're going. We're in the process of raising a second vehicle. We are already actively deploying out of that one. I'll certainly say that the investment environment today is quite different than it was even 3 years ago, when I'd say we first started to get very active. And we'll talk a little bit about those dynamics. But before that, want to walk through kind of the current state of the regulatory status of the industry. Really, this slide here is meant to be more of a visual representation, and we'll update this through 23 here. But what this is showing you is just the exponential growth of number of marijuana-related bills that have been introduced to Congress, you know, call it in the past 2 decades or so. And as you can see, that number continues to grow, and I can tell you the trend continues to grow into 2022, 2023 as well. What we're really seeing is that this is no longer a bipartisan movement. A partisan movement. We're seeing that this is, you know, being elected on both sides of the aisle. We've seen a lot of progress towards reform, but we still have a ways to go. this slide right here is really just meant to show the anticipated growth of the asset class. This is global legal spending of the US cannabis industry, both historical and projected. We expect, as you can see here, that North America is going to vastly dominate global cannabis sales. And as such, we spend 99% of our time really in our own backyard, in our own sandbox. We don't really view the point in going to Europe or South America, in most cases, even Canada, to gain exposure to the asset class. We know that we have a very strong consumer base here in the US. And with that being said, part of what got us really interested in the space in the first place, back in, call it 2019, when we first got involved in the industry, it was about a 12.5 billion legal US cannabis industry across the various states that had legalized. At that point in time, we were estimating the black market to be somewhere in the range of 100 to 150 billion, closer to the high end of that range. Why did we get involved in cannabis? Amongst other reasons, simply, we knew that there was a ton of embedded demand, and part of what we're trying to accomplish here is to evolve that embedded demand to the legal industry. And I'll talk a little bit more about that in one of these next slides here. This slide here is meant to be also another visual representation of how capital constrained the industry really is. Look, in a similar vein to how you're probably aware that, traditional banks, FDIC insured deposit institutions, et cetera, insurance companies don't service the industry. Most traditional capital allocators, hedge funds, VCs, et cetera, are also boxed out from investing in the asset class. On top of that, you see that US exchanges, the NASDAQ, the NYSE, they won't allow for US cannabis companies to be listed on the exchanges until we get further banking reform, which gives them kind of the safe harbor or protection that the federal government is not going to come in and say that you're dealing in illegal substances, thus you're in trouble, right? We think that we're really at the precipice of a lot of that change, likely seeing change in, call it, the next 6 to 24 months. There's been quite a bit of momentum there. We'll touch on that in a little bit here. But before we get into that, this is the map of the United States, basically today. So cannabis, as it stands today, has some form of either adult use or medical legalization across virtually every legal state or virtually every state at this point. We ended last year with nearly 40 states with some form of legal cannabis. By the end of this year, we think that we'll probably be around 41 or 42 states. So it's starting to become a little bit of, if you can't beat them, join them kind of mentality out there. Like, you just take a look at, a state like Kansas, for example, surrounded by Arkansas, surrounded by Colorado, Oklahoma, states that have remained illegal, haven't been able to stop the flow of legal cannabis into their states. So not only are they not really benefiting from tax revenues, they're also spending money incarcerating folks for, petty or larger marijuana related offenses. We believe it's just a matter of time before you get, basically all the states online. And at that point in time is when we think that there will be a regulatory shift at the federal level, but there will be likely incremental steps along the way. So the incremental steps to really kind of keep on your radar, the one that I think would alleviate most of the pressure for cannabis related businesses today, which certainly makes it very difficult for these companies to operate, is figuring out banking and taxation. So with regards to banking, aside from regional banks or credit unions, you don't really have access to any of the large traditional banks. Funny enough, the industry was somewhat shielded from the SVB collapse, et cetera, because we didn't have access to SVB in the first place. So kind of a weird silver lining there to say that the industry was actually shielded from banking because we don't have access to traditional banking. As you can imagine, that creates, in most cases, a pretty high cost of capital for these businesses. And probably even more importantly than the cost of capital is just the access to capital. While on one side, the cost of capital could be really high, you might not even be able to go out there and raise money. And that's kind of what this slide was showing you there. We did a study about 1.5 years ago, and based on all the companies coming to market, how many actually received funding, we thought about 15% or so. I think that number's crept up in 2022 a little bit, but I think this year it'll likely creep back down to about that 15% level. Then with regards to taxation, for anybody that's been involved or knows anything about the asset class, there's, I'd call it an antiquated piece of the tax code called 280E, whereby licensed marijuana companies, meaning if you touch the plant in any way, whether you're a cultivator, a processor, a manufacturer, or a branded product or a retailer, you have to be licensed to do that. Licensed marijuana businesses deal with Section 280E, which basically will not allow for their businesses to deduct expenses beyond cost of goods sold. So you're talking about tax rates on average of around 70 to 73% for these companies, which are being taxed on their gross profit. That being said, there are states that, most states allow for vertical integration, whereas you can handle the process all the way, call it from seed to sale. So again, grow it, process it, manufacture it, brand it, sell it. In doing so and being fully vertical, you do see some benefits with being able to remove some of those expenses around to cost of goods sold. Anyway, some creative accounting, but nonetheless makes it very difficult for these companies to operate cash flow break even or even positive. I would generally say EBITDA as a metric in the cannabis industry is extremely flawed. There are a lot of reasons why EBITDA, I think, should not be used, or why it can actually skew the perceived profitability of a company. For one, say there's a company that, there's a lot of sale leasebacks in the industry. We found that as a means to raise capital more easily. So you're a big operator, you've got a massive piece of real estate, you're having trouble raising capital to go out there and build out your facility. You sell the real estate to a REIT, you lease it back to you. Obviously, that can have a major impact on EBITDA, given the big rent expense, et cetera. And that's not great, because you actually use it as a means to raise capital for your business, and you're paying, a fair market rent for that property. Whereas somebody who has a major debt load on the company and still owns their real estate, that's not going to be reflected in EBITDA well. So we actually look more at cash flow from operations, or specifically just free cash flow, whenever we're trying to really kind of give an apples to apples comparison of these cannabis businesses. But nonetheless, 280E certainly has a major effect on that, given the tax at the gross profit level. So the two things that could really fix that, we think, are safe banking and the HOPE Act. Safe banking would essentially give safe harbor to banks that want to work with the cannabis industry. And the HOPE Act would actually open up the US exchanges to working with cannabis related businesses. That way, these major multi-state cannabis companies that are currently listed on the Canadian exchanges could actually go out there and uplist to the US capital markets, which we think would not only broadly increase the capital availability to the space, but also greatly reduce the cost of capital for these businesses, as traditional institutions will be able to start to pour in. So we're really excited about the prospects of that happening. Albeit, I think there's also a silver lining for us as investors in the space today, not having that. Simply put, given we're one of the few pockets of capital that these companies can go to for raising money, or for looking for growth equity, et cetera. It certainly puts us in a very fortuitous spot to go out there and command much stronger deal terms, much better valuations today. A lot of our thesis today, this is kind of the chaotic moment in the cannabis industry, breeds a lot of opportunity, or the traditional kind of be greedy when others are fearful. We think that, to get punny here, planting seeds today, we'll be able to harvest a lot of those investments tomorrow, once there is, kind of one of these inflection points like safe banking or the HOPE Act. Outside of the capital markets, some real important things to watch would also be obviously federal legalization, meaning that cannabis would likely be legalized in some capacity at the federal level. What we think that's going to look like is likely a lot like the alcohol industry. So you can think of the cannabis industry today as every single state really being its own cannabis economy. These states have basically taken it upon themselves to defy the federal government to legalize marijuana, to give the people a voice, and basically give them what they want. And every single state's its own little ecosystem. it's important to realize that there's no interstate commerce. You're not selling, cannabis can't cross California into Nevada or into New Mexico, et cetera. And upon federal legalization, we think that all of that will change. You'll have interstate commerce. You'll be able to have, major distribution hubs, distribution networks. But we also think that it'll look like the alcohol industry with regards to regulations. And what I mean by that is every state today, even down to the municipality, can decide whether or not they want to sell alcohol, right? So I always like to use Utah and Nevada as an example, given their neighbors and they're so drastically different. So Utah, if you've been there, you can only go to state-sponsored liquor stores. If you go to a bar, a shot of whiskey is poured out of a 1 ounce contraption. It's measured perfectly. Or if you go next door to Nevada, you can buy a fifth of vodka at a gas station, and you can, openly, you can have an open container, like on the Vegas Strip, et cetera. So we think that actually the rules and regulations that you see in place within the states already today will likely survive past federal legalization. What federal legalization will do is broadly open up interstate commerce, and again, also likely fix the banking issues, et cetera. The lowest hanging fruit for near-term reform, which we think could be quite significant, which frankly we don't think the markets have priced in well today, is the potential for rescheduling of cannabis. So cannabis today is considered a Schedule I narcotic, meaning that it has absolutely no medical value, has a highly addictive characteristics. It's quite a hypocritical scheduling of for marijuana to be there. It's actually cocaine is a Schedule II, just to give you an example. We know that the FDA has already approved several cannabis-derived drugs. Marinol, which is a synthetic cannabinoid, has been on the market since the 80s, using it for various different types of ailments, mostly cancer patients or very folks that are in a lot of pain. I don't know why the words slipping my mind. There's also FDA approved Epidiolex. Epidiolex is it's a drug approved by GW Pharma, publicly traded company. Epidiolex is used to treat rare forms of epilepsy. It's been shown to be quite effective in many patients, et cetera. So the fact that it's still Schedule I today obviously doesn't make a lot of sense. At the end of last year, President Biden did a couple things which we think we will likely see a lot of momentum by the end of this year with regards to rescheduling. So number one, he announced a federal pardon of marijuana offenses, pardoning about 6,500 inmates. Look, that doesn't fundamentally really change anything for the asset class or the industry, but what it really does do is send a signal that the White House is actually now willing to talk about the industry, which they had basically been quiet on for about 2 years. But more importantly, he also announced a formal federal review of cannabis as a Schedule I drug. And he specifically asked for that review to be done in haste. Our views are that, and most analysts on Wall Street that cover the space agree with this, that we will likely see or hear about what rescheduling looks like by the end of this year. Call a spade a spade. We certainly think that it's a political ploy to win votes going into the election cycle. But nonetheless, we do expect to see some near-term federal reform on rescheduling. We think cannabis could get rescheduled down to a 3 or maybe even a 4, which we believe would clear up the 280E issues. And would pave the way for safe banking and the HOPE Act to pass the House and the Senate much easier. So that's kind of a quick update of the current state of the markets. The last slide I'm going to talk to you guys about is more around the capital markets and where things stand today, and then I'll pass it on to Pete here. Let me check to see if there's been any questions. No questions. So again, what this chart here is showing you is really kind of the current growth of the industry. These green bars are showing you the total size of the US cannabis industry, growing at a really healthy pace year over year. And this line chart here, the CMBS, it's a cannabis ETF trading most public and Canadian cannabis companies. you can see it's trading at basically all-time lows. This massive run up here was largely caused by speculation. Folks seeing Biden was going into office, Democrats were controlling both chambers of the House, or both chambers of Congress. I think a lot of folks anticipated that this last presidential election would have resulted in federal legalization. Obviously, it did not. And we've subsequently seen quite a massive rundown in the valuations of cannabis companies, to the point where we are today, where we're seeing valuations basically at historic lows. But we're seeing an industry that's also more mature, growing faster than it ever has, and likely closer to legalization than we've ever been. So from our point of view, this is a very opportunistic time to get involved in the space. The way that we like to attack the space today is largely via getting after the best operators in the space, the blue chip guys, the blue chip gals out there that are running great businesses, that are actually focused on profitability, cash flow. 2 or 3 years ago, it was a lot easier for cannabis related companies to raise capital, and basically to add runway to those balance sheets. Fast forward to today with the broader downturn in the cap markets. A lot of these companies haven't done a good job of basically cutting OpEx, et cetera, working towards profitability. And what you have is a lot of companies that have a lot of great assets on the balance sheet, but they've run out of cash. They can't pay their employees, et cetera. And so what we're doing is we're working with, a very select few operators to beef up their balance sheet so that they can go out there and consolidate a lot of these assets for pennies on the dollar. Again, I think that the metrics that we focus on the most today to be successful in the space is cash flow from operations or free cash flow. Companies that are more on the kind of slow and steady wins the race today, because we believe that once we get to one of those inflection points, whether it's banking, legalization, interstate commerce, et cetera, rescheduling, we will be in a position to really benefit from a broader loosening of the capital markets in the industry. So look, things are tough out there, but certainly if you've got a keen focus on the space and who the operators are, there's certainly a lot of opportunity out there today. So with that, I will pass it on to Pete, who will kind of dive a little bit deeper into kind of where valuations sit compared to other comps in the market.
Yeah, thanks, Tibby. Thanks for the market data there and update. And once again, if anybody has any questions, please feel free to fire those in the chat and we'll answer them as they come in. But with that, yeah, so Tibby talked a bit about the state of the market, what the regulatory environment looks like today, and what's going on in Washington. What you're looking at on your screen, and then what I'll walk you through is really the state of valuations today, some of the cap market dynamics, and then moreover how we look at those dynamics and figure out where the best place we believe is to place capital today. So what you're looking at here is something that I think a lot of people simply just don't realize about cannabis. And it's really the difference when you look at multiples and expected EBITDA growth from your traditional CPG players, alcohol, tobacco companies, et cetera, where those are trading versus where your US cannabis operators are trading. And before I touch on that a bit, I will say one thing most people aren't familiar with is, all these US-based companies, if they have operations in the United States, since it's federally illegal in the US, they are trading on the Canadian Securities Exchange. It was formerly dubbed the Cannabis Securities Exchange. If you actually looked at the index at one point in time, I don't think it's too far off from this today, but at one point in time, cannabis made up like 70-something% of the CSE index. Anyways, the CSE is a very illiquid, low volume exchange, not a lot of institutional investment, far different reporting requirements than say an NYSE, NASDAQ, or even a TSX. And so subsequently, you've had this kind of a backwards cap markets environment for the cannabis industry, where you have U.S. Companies, so companies with U.S. cannabis operations that have had to list on the Canadian exchanges. And then you've had probably a lot of the tickers you see on CNBC and whatnot, the Canadian operators or licensed producers, Canadian LPs, you'll hear them called. Those are the guys that are listed on the U.S. exchanges. So an interesting dynamic there. The irony of the whole thing is that the U.S. is really where there's most of the market opportunity. Canada is such a small fraction of that, yet we even see or hear people today who think they may be buying U.S. cannabis because they're buying one of the Canadian licensed producers that's publicly traded. In reality, they are actually buying a company that all of their operations are located in Canada. So anyways, one thing we're seeing today is we're seeing a lot of the multi-state operators in the U.S. That are trying to make moves onto some of the larger U.S. exchanges. That's proven very difficult, especially 2-3 years from now for sure. But even today, they continue to run into roadblocks. The federal illegality, lack of access to banking, and a number of other things have just prevented them. I should say prevented the exchanges from getting comfortable with listing U.S. cannabis companies. Recently, what we've seen is a lot of these guys want to move from the Canadian Securities Exchange, CSC, to the TSX, which is another Canadian exchange, but it's also has a lot more trading volume, gets picked up by ETFs, is a much more legitimate exchange for these companies to actually access real capital. So that's the dynamic. Then you look at just some of the differences in pricing here, right, on these stocks. And so you see your traditional CPG operators, call it between 4, 5, 6% expected EBITDA growth over the coming year, and they're trading at anywhere from 8 to 15 times. And then you look at the cannabis companies, right, which have far greater growth expectations in the neighborhood of 40 to 60% when talking about EBITDA. And these companies are trading around, call it a 5-6x or so when you look at them at large. So big dislocation in the market there. A lot of opportunity. These stocks, if you looked at them, and actually if you go back to even the chart Tibby showed earlier, which just showed the cannabis ETF over time. I mean, a lot of these stocks are down, call it 80 to 90% over the last 18 months. So we see a big opportunity there. But nonetheless, I'd also say that's very reflective of what even the cannabis private markets look like. So the types of terms and valuations and that we're seeing today are incredible if you're an equity investor for sure, and even on the debt side. And so whenever we talk to a CFA chapter, and as Tibby mentioned, we've talked to a number of them at this point. We always take a quick moment and just look over the state market that the CFA chapter is in. Today in Minnesota, you have of course a medical program. Recreational cannabis is not yet legal, but nonetheless, even if you look at the patient count, it's very small as a percentage of the population. So most of you can probably get a medical cannabis card if you wanted to. I imagine it's not very hard in the state of Minnesota, but nonetheless, from an investment opportunity, even that barrier just drastically reduces the number of consumers actually buying cannabis in the state. So even if you look like a state like Ohio that we're invested in, I mean, we're talking under 1 million patients, right? And it's a huge state, and it's a medical program, and it's somewhat restrictive. But as that goes away, traditionally, that's when you're going to see a huge uptick, of course, in sales. You see a lot of businesses change hands, a lot of transactions in M&A. It's always an exciting time for any given state, right when they vote in a recreational program. Yeah, and so just to touch on this a bit, and so we're okay on time here, but I'll try to summarize the slide as best I can. You know, this is really, if you look at how key investment partners thinks about the cannabis space when we go through our investment processes, this is kind of a map to that thought process. Really, when you think about the space, there are two ways to bifurcate it. You know, you have in one bucket your ancillary companies. These are companies in one sentence that do not touch the plant. In other words, don't have a license. And so they're not, generally speaking, a branded product. They're not growing cannabis. They're not processing cannabis or delivering cannabis in some ways. And they're not a retail store, right? And then you have the other side, the plant touching sector, right, which is all the things I just mentioned, all the things you'd think of when you probably think of cannabis investing, right? Edibles, beverages, vaporizers, all the different CPG goods. You think of distributions, acquiring and selling licenses, extraction, et cetera. So, you know, a lot of on the plant touching side, you're really going toe to toe with a lot of multi-state operators, which are the big guys I mentioned, the big companies on the prior slide. On the ancillary side, one thing why we have really liked this sector, the cannabis space at Key, is because you don't have to deal with a lot of the regulatory burden that you do on the plant touching side, and regulatory risk, I should also mention. And so ancillary businesses, right? You know, we're talking about, I often call it Canatech, software solutions. This can be B2B marketplaces, data analytics, HR and payroll systems, testing labs, genetics, loyalty programs. Essentially, if you think of a normal retail store, call it a Foot Locker, that's going to sell a number. They sell shoes, right? But then at the end of the day, they have loyalty programs, they have POS systems, they pay their employees through you know, HR and payroll systems as a corporation. Cannabis is no different, except for the fact that if you're a retail store, a dispensary in the cannabis space, you don't have access to the ADPs of the world, the POS systems that restaurants and retailers outside of cannabis use. You don't have you know, efficient supply chains, B2B marketplaces. You struggle to accept payments on the major credit card rails. So it's created a really interesting environment today where you have an opportunity where there's a lot of young Canatech companies that don't touch the plant, but nonetheless are supporting the industry and growing with the industry, but don't have to deal with interstate commerce. In other words, they can do business all over the US. They don't have to deal with individual state by state legalization. How do you play it? What are the politics? They more just service the cannabis industry at large and grow as the cannabis industry grows. So there's definitely a lot of advantages to the ancillary side. On the other hand, the plant touching side also has a lot of opportunities, just different, and you have to know it very well to get it down, so to speak, from an investment perspective. So interesting dynamics taking place in both buckets. And just to touch on this briefly, you know, one thing we look at Key when we got into the industry, a lot of what we said is, hey, you know, we like the risk profile on these Canatech companies, but how do we invest? How do we pick the right ones? You know, where are we going to be successful? What type of Canatech platform is going to be necessary for the industry to operate? What are needs-based softwares that cannabis companies need to operate? And so one thing we've done, and I'd say we've done it very effectively since we started Key, would be really what you're looking at on your screen, which is identifying businesses and other industries in the non-cannabis space that are necessary for CPG companies to operate and retailers to operate, and then finding the equivalent of those businesses in the cannabis space. So great example is IRI and BDS Analytics. IRI, I'm sure many of you know, is one of the two largest data providers and market intelligence providers for the broader CPG space. So if you're a grocery store trying to understand where to put products, who's buying your products, how frequently, at what prices. If you're Coca-Cola that wants to know if you should be on the end of an aisle or where you should be located in the grocery store to maximize sales, well, you're going to look at data from a group like IRI. Subsequently, similar businesses like BDSA have popped up in the cannabis space. BDS is, before BDS, right, you had a lot of different retailers and branded products. And if you were branded products selling through a retail channel, you didn't know really who was buying your product. You didn't really know how to price it except what worked for your margin. It was hard to figure out how to be competitive. And it was hard to know, okay, what demographic is really buying this product? Who am I really selling to? Anyways, what BDS has done is they've made partnerships with dispensaries all over the US. They've aggregated data from these dispensaries into a very sophisticated software system they call GreenEdge. What GreenEdge does is allows both branded products, multi-state operators, and really anybody interested in the cannabis space to pay BDS a subscription fee, and then they can go into their GreenEdge portal and essentially slice and dice data in whatever way they choose. So if you're an operator focused only in, let's say, Colorado and Illinois, you can just look at those state markets. You can drill down into vaporizer products in the city of Chicago in a certain area, right? How are you pricing yourselves? Pricing your product versus your competitors? Like I said, who is buying your product and how frequently? And if you decrease the price by $1, how does that change? So these types of analyses are new to the cannabis industry. They're another day in the office for everybody outside the cannabis industry. So we like identifying these businesses because we believe that gives us a better risk-adjusted return, frankly, on our investment, because we've seen something that's been done before, right? We're not reinventing the wheel.
Awesome. Thanks, Pete. So yeah, look, that basically concludes the presentation here. Checking to see if there's any questions in the chat. I don't see any, but certainly feel free to raise your hand or shout something out if you guys have anything. We've got a ton of information on our website. It's all publicly available, white papers, newsletters, blogs, etc. I think that, frankly, we pride ourselves in putting out educational content. That's why we've got this relationship with the CFA Institute. Should you have any questions or anyone that we should be talking to, etc., certainly feel free to reach out to us directly. You can find our contact information on the back of this presentation. I had also shared with Shannon an executive summary of Key, which has our contact info on there as well. But without further ado, yeah, we're happy to wait around and see if there's any questions. If not, let everybody have some time in their day back.